Hey everyone, welcome into today's webinar breakdown. We're going to be talking about Interim and Backpay on federal disability retirement. Both of these are going to have a financial impact as you move into retirement, so it's important that you know a lot about both of them. But before we get started, please don't forget to hit the like button and subscribe to our channel so you can stay up to date with all of our content that we make for federal employees just like you. Now let's dive in. When we talk about interim payments and back pay, these are two separate payments that are paid out to recipients of federal disability retirement. Interim payments are made to those approved for federal disability retirement while the OPM is finalizing their annuity. The Office of Personnel Management actually uses these payments as a way to provide money to the annuitants quickly while they wait for their final calculations. So it's not the final or full amount that you will be receiving from your federal disability retirement annuity, but rather an estimate that comes to be around 80% of what your final retirement annuity will be paid at. Back pay, on the other hand, is actually a lump sum payment awarded to those that have been in a non-pay status while waiting for the case to be finalized. The amount of back pay you can receive will be based on the amount of time you're out of work, and that's determined by your last date in pay status. So it's important to make sure you know what your last date in pay status is in order to avoid having any back pay resets and to make sure you get the most out of your back pay lump sum. Your back pay will be paid out at your federal disability retirement annuity pay, not your regular basic pay rate. If for any reason there's a miscalculation with your interim or back pay payments, the OPM will reimburse you after your case is finalized, and they will ensure that you get the right amount paid out to you. Now that we've talked a little bit about what interim and back pay payments are, let's cover a couple of questions that we received in our recent webinar on this very subject. Will holiday pay affect my back pay? Yes, and this is something that you need to be made aware of. If you receive any type of income or payments from your agency, it will reset your last date in pay status. Meaning, if you were out of work for about 3 months and then all of a sudden you receive a pay stub for holiday pay from your agency, your last date in pay status is technically reset and you will not receive any back pay for the 3 months that you were out of work. This is why it's important to have a representative help you so you can avoid a reset like this. How can I ensure that the OPM correctly calculated my interim pay to avoid overpayment? Interim pay is typically paid out at 80% of what your finalized annuity payments will be. However, sometimes an overpayment could occur. In this case, if there is an overpayment, you will be responsible to pay back that payment to the OPM. This is why we recommend that if you receive any type of payment such as interim pay or back pay, that you save some money just in case of an overpayment. That way you'll have the money saved, put aside, and you can easily send that money back to the OPM and not have to worry about owing them any money. That was a lot of information, and honestly there's so much more to learn about this benefit, so check out the description below for links to more of our resources and to give our firm a call. Thank you so much for watching, and don't forget to subscribe to stay up to date with our next webinar breakdown video. See you next time.